All right, welcome to another deep dive. The crypto world's it's really buzzing right now. Bitcoin's like flirting with those record highs, and even those like seasoned analysts, they're kind of surprised by how much momentum there is. And you guys send in like a ton of articles about this whole crypto surge, and you want to like really understand what's driving it. So let's unpack it together and get this. We have expert analysis from, get this, Bitwise CIO Matt Hogan. Like help us break it all down.
Yeah, it's pretty wild to see these numbers, right? Bitcoin, like almost $85,000. Ether just broke 3,300. Even Solana seeing gains. It's up to 218.
And remember those crypto-focused stocks you were asking about? Coinbase and Riot, they're both up over 19%. There's a lot of energy in this space right now.
Yeah, oh yeah, absolutely. And one company that seems particularly confident in Bitcoin's future is MicroStrategy.
Yeah.
They just bought a massive amount of Bitcoin, 27,200 to be exact.
I saw that. Over $2 billion worth. They are not messing around.
No, they're clearly putting their money where their mouth is, Their average purchase price is somewhere around like $42,697 per Bitcoin. So that tells you they are betting big time on this continued rise.
Like they're like sending a signal to the market, like, hey, we're still bullish on Bitcoin even at these prices.
Yeah.
But amidst all this excitement, there's also some drama unfolding between FTX and Binance. FTX just filed a lawsuit against Binance for $1.8 billion.
Yeah, a little plot twist in the story, right? Yeah, it's a reminder that the crypto world definitely not without its risks and controversies. This lawsuit stems from a deal that went sour back in 2021. It'll be interesting to see how it all plays out. But enough about the drama. Let's get back to the big picture. Matt Hogan seems to think that this Bitcoin rally, it has legs.
Yeah, I was really struck by his concept of an air gap to $100,000. It almost sounds like he's saying there's nothing stopping Bitcoin from hitting that mark.
Yeah, that's essentially what he's saying. He believes there's a lack of significant resistance on Bitcoin's path, upward, which could lead to pretty rapid price appreciation. But, that also kind of emphasizes the importance of being really thoughtful about when to enter and exit the market.
So for those of us watching from the sidelines, timing is key. But what's fueling this confidence? Why does he see such a clear path for Bitcoin?
So he points to a couple of factors, right? First, there's just a shortage of people willing to sell their Bitcoin at these prices. I mean, long-term holders. They're in it for the long haul. They're betting on even higher prices down the road.
So basically the supply shrinking while demand stays strong.
Classic supply and demand, right?
Exactly. Less Bitcoin available means those who want it are willing to pay a premium for it. And the second factor, and I know you're curious about this, is this shift in the U.S. regulatory landscape?
Yeah. That was a big question I had. It seems like crypto is finally gaining some legitimacy. Yeah, that's what Hogan is seeing too. He believes the shift, from resistance to a more supportive stance on regulation has been a major catalyst for this rally.
And remember, those articles you sent about a potential Trump administration, could that really impact crypto?
Hogan thinks it could, yeah. He suggests the Trump administration might create an even more favorable environment for Bitcoin, potentially pushing it to a status similar to gold. Like, imagine that.
Wow, that would be huge.
Yeah.
So Bitwise predicted Bitcoin could hit $80,000 by year end.
Yeah.
And we're already there. What's Hogan's outlook now?
Even more bullish, he sees a clear path to $100,000, but he also cautions that we might see some investors kind of cashing out at that point, leading to like a temporary resistance.
So even with all this positive momentum, there's always potential for volatility. Dotted now, Ethereum is back above $3,000.
Yeah.
But Hogan doesn't think it's just riding Bitcoin's coattails, right? He sees like unique factors driving Ethereum's growth.
Right, and this ties in nicely with your interest in stablecoins and DeFi. Hogan believes regulation is going to be a major factor in Ethereum's future. But to understand why, we need to quickly define stablecoins. These are cryptocurrencies designed to maintain a stable value, usually pegged to something like the US dollar.
Okay, so less of a roller coaster ride than something like Bitcoin. But what makes Ethereum so central to this?
Well, Ethereum is the main platform for stablecoins and DeFi applications. DeFi, or decentralized finance, is basically an ecosystem of financial applications that are built on blockchains.
So instead of relying on like traditional banks DeFi wants to build, like a more open financial system using blockchain technology.
Exactly. DeFi lets you do things like lend, borrow, trade, and earn interest on your crypto, all without needing a traditional intermediary.
Okay, so I'm starting to see how stablecoins are a key ingredient in many of these DeFi applications. They bring, that much-needed stability.
Exactly, yeah, they take away a lot of the volatility risk associated with crypto. Think about it. You can deposit your stablecoins, which are pegged to the dollar, and earn interest without worrying about wild price swings affecting your principal.
That makes a lot of sense. Stablecoins bring, like, predictability to the DeFi world, which which has to be appealing to a wider range of people. And I guess that's why Hogan thinks stablecoin regulation could be such a big deal for the growth of both DeFi and Ethereum.
Precisely, as regulations become clearer, we could see a huge influx of investment into the DeFi space. And since Ethereum is that foundation, it stands to benefit significantly.
Okay, I think I'm starting to get the big picture here. Bitcoin is charging ahead, potentially hitting $100,000. And Ethereum is carving out its own path, driven by the potential of stablecoins and DeFi. It sounds like the crypto market is really heating up.
Oh, yeah, it is. But let's zoom out for a second and consider the bigger picture. Both Bitcoin and Ethereum they're benefiting from a changing economic and regulatory landscape. We're seeing a growing acceptance of crypto as a legitimate asset class, which attracts more investors and, drives up that demand.
That makes a lot of sense. But what about those long-term holders? Why aren't they selling, even as prices reach these record highs?
Hogan believes they're holding out for even bigger milestones, like Bitcoin hitting $100,000 or even higher. And this reluctance to sell, it reduces the available supply, putting even more upward pressure on those prices.
So it's like a self-fulfilling prophecy. The more people believe in Bitcoin's potential, the less they sell. And that, in turn, drives the price even higher.
That's amazing. And you mentioned earlier that Hogan thinks a Trump administration could create like a super favorable environment for Bitcoin. Can you elaborate on that? Like what specific policies might be driving that view? Well, Hogan thinks policies like tariffs could potentially lead to inflation, which would then make Bitcoin more attractive as a hedge against a declining dollar.
Right, because Bitcoin is often seen as digital gold, like a safe haven asset.
Exactly. So a Trump administration could unintentionally boost Bitcoin's appeal by enacting policies that might weaken the traditional financial system. It's kind of ironic, isn't it?
It is, and it's not just Bitcoin that could benefit. Ethereum, with its focus on infrastructure and innovation, could also see gains from policies that encourage crypto development.
Absolutely. But before we get carried away, it is crucial to remember that crypto markets are still relatively young and prone to significant fluctuations. So, investors need to be prepared for volatility and think long term.
That's a great point. So to quickly recap what we've learned so far, both Bitcoin and Ethereum are seeing significant price surges.
We've also heard from Matt Hogan, who thinks Bitcoin could reach $100,000 by year end. And Ethereum looks poised for substantial growth, thanks to the potential of stablecoins and DeFi.
And we talked about that potential impact of a Trump administration, which could be a game changer for crypto. Phew, that's a lot to process. Before we dive deeper into stablecoins and DeFi, I want to leave you with a question to consider. Given the explosive growth potential of these areas, is now the time to explore them further? Stay tuned for part 2, where we unpack these concepts and see how they're playing out in the real world. All right, let's dive a little deeper into these stablecoins and DeFi concepts. I've been reading a lot about them, but to be honest, I still need some help, like connecting all the dots. Can you just break down stablecoins for me in like plain English? What are they, and why is everyone so excited about them?
Sure. Imagine a cryptocurrency that combines the speed and efficiency of digital assets like Bitcoin, but without, those wild price swings. Stablecoins aim to offer like the best of both worlds, the ease of crypto with the stability of traditional currencies like the US dollar.
So no more checking the price every 5 minutes to see if your investment has plummeted. That does sound appealing, but how do they actually maintain that stable value?
There are a couple of ways to do it. Some stablecoins are backed by actual reserves of traditional currency, like US dollars held in bank accounts. For every stablecoin in circulation, there's an equivalent amount of the pegged currency held in reserve. It's like a digital version of traditional money, but on the blockchain.
That makes sense. It's like having a digital IOU backed by real assets.
Yeah.
But you mentioned like other approaches. What are those?
Right. We also have what are called algorithmic stablecoins. These are a bit more complex. They use algorithms and smart contracts to maintain their peg to a target value. constantly adjusting the supply of the stablecoin based on market demand. It's a bit like a self-balancing system
Oh,
that keeps the price stable without needing those centralized reserves.
interesting. So it sounds like stablecoins could really make it easier for people to use crypto for everyday things
Okay.
without having to worry about those price fluctuations. But how does DeFi tie into all of this?
Great question. Remember DeFi, it aims to create a more open and accessible financial system using blockchain technology. And stablecoins, they play a crucial role in many of these applications.
Okay, so instead of going through a traditional bank for things like lending or borrowing, I could potentially use a DeFi platform that utilizes stablecoins.
Exactly, yeah. DeFi platforms are built on blockchains, so they offer transparency, security, and accessibility. And by incorporating stablecoins, they can offer services that are similar to traditional finance, but with the added benefits of decentralization.
So I could deposit stablecoins into a DeFi lending platform and earn interest, or even take out a loan using those stablecoins as collateral.
Precisely. It's all about giving individuals more control over their assets and providing access to financial services that were traditionally out of reach for many.
That's pretty revolutionary, and I can see why there's so much buzz around DeFi and stablecoins. But we've been talking about regulation. What are some of the key issues being debated, and how could they impact the growth of stablecoins and DeFi?
Well, regulators are mainly focused on ensuring the stability and security of stablecoins. They want to prevent a scenario where a stablecoin loses its peg and throws the whole DeFi ecosystem
Yeah.
into chaos.
Right, because if people lose trust in stablecoins, that could undermine the whole idea of DeFi, right?
It's exactly. So for those stablecoins that are backed by reserves, regulators want to make sure those reserves are properly audited and managed. And for the algorithmic stablecoins, they're still working on how best to oversee those complex algorithms to make sure they function as intended and don't pose a systemic risk.
It sounds like there's still a lot of work to be done on the regulatory front, but the fact that regulators are actively engaging with the industry, that's a good sign, right?
Absolutely. It shows that they're taking this seriously
Hmm.
and working towards a framework that supports innovation while addressing potential risks. Hogan believes that once those regulations are in place, it could unlock like a floodgate of investment into the DeFi space, which would be a huge boost for Ethereum.
That trillion-dollar market cap prediction for stablecoins
Mhm.
is starting to make more sense now. It sounds like we're still in the early innings of this DeFi revolution, and there's a lot of potential for growth. But it's also important to remember that this is still a relatively new and untested space, so there are risks involved.
That's a great point. It's important to approach DeFi with a balanced perspective, recognizing both the opportunities and the challenges. Now, I know you were curious about real-world applications of stablecoins and DeFi. Are you ready to see how these concepts are actually being used today?
Absolutely. Let's hear about some of those real-world examples. Okay, I'm ready for those real-world examples. Show me how this stablecoin and DeFi magic is actually playing out.
Okay, so let's start with something you're probably familiar with, sending money across borders. Think about those high fees and long wait times that people often face with traditional remittance services. Stablecoins are starting to change that game.
Yeah, I've read about this. Using crypto to bypass those traditional systems can be a huge help, especially for, folks sending money back home to their families.
Exactly. And we're seeing platforms pop up that let people send stablecoins almost instantly with much lower fees than traditional money transfer services. This is a game changer, particularly in developing countries, where even small savings on fees can make a big difference.
So instead of waiting days and losing a chunk of their hard-earned money to fees, people can send stablecoins that arrive in minutes.
With minimal costs. That's incredible. What other cool use cases are out there?
Well, beyond remittances, stablecoins are also being used for smaller, everyday transactions. Think about, content creators receiving tips in stablecoins, or even being able to buy a cup of coffee with crypto. Wow, that's the kind of mainstream adoption. That makes this all feel much more tangible. It's not just a theoretical concept anymore.
Right, and then there's the whole world of DeFi lending and borrowing, which is already gaining traction. Platforms like Ahav and Compound allow people to earn interest on their stablecoin holdings or borrow against them.
So could I potentially earn a higher interest rate on my stablecoins through a DeFi platform? compared to what I'd get at a traditional bank.
That's the idea. DeFi platforms often offer more competitive rates
Yeah.
because they cut out the middleman, the traditional banks and their associated overhead costs.
It sounds like DeFi is really democratizing finance,
Yeah.
giving individuals more control over their money and opening up access to financial services that were previously out of reach.
That's a great way to put it. DeFi is all about empowering individuals. But it's not just individuals who stand to benefit. Businesses are also exploring how they can use stablecoins and DeFi to streamline their operations.
Oh yeah, I bet businesses could really benefit from faster payments, lower transaction fees, all that good stuff.
Absolutely. And beyond just the efficiency gains, there's also the exciting potential of something called programmable money.
Okay, now you're going to have to break that down for me. Programmable money. That sounds futuristic, but also a bit intimidating.
Think of it like this. Programmable money allows you to set rules for how your money is used. Imagine automating payments to vendors or suppliers, setting up recurring investments that execute based on certain conditions, or even creating entirely new types of financial instruments.
Wow, that's pretty mind-blowing. It sounds like we're just scratching the surface. What's possible with stablecoins and DeFi?
Yeah, it's like the Wild West out there,
Yeah.
full of opportunities and challenges.
So if we were to distill all of this down to some key takeaways, for our listener, what would those be? What's the big picture here?
The crypto world is evolving at an incredible pace. Bitcoin and Ethereum are at the forefront of this revolution, with regulatory changes shaping the landscape. Stablecoins are emerging as a bridge between traditional finance and the decentralized world of DeFi, opening up exciting new possibilities.
Yeah, we've seen how stablecoins can make cross-border payments faster and cheaper, facilitate microtransactions, and bring much-needed stability to the DeFi ecosystem.
And we've just glimpsed the transformative power of DeFi, offering individuals and businesses new ways to manage their money, access capital, and create innovative financial products.
It's clear that crypto, stablecoins, and DeFi are forces to be reckoned with. The future of finance is being rewritten right before our eyes.
And that leads us to a final thought-provoking question for our listener. In a world where money is becoming increasingly programmable and decentralized, how will you adapt and thrive in this new financial landscape?
That's a great question to ponder. It's clear that this is a space worth paying attention to. We're likely to see a profound impact on our lives in the years to come. Thanks for joining us on this deep dive into the world of WeCo, crypto, stablecoins, and DeFi. We hope you found it informative and insightful.